Thanks, guys.
All right. Thank you very much, Scott. Steve, how's it
Yo,
going?
I'm here. It's going good. Weekend went fast. Try and watch Pro Bowl football for 5 minutes and turn that off because that was pretty silly. Yeah, glad to be back on a Monday. Interesting day in the market. Got a lot of interesting stuff to share, I think, today.
I would tend to agree with you on that. It is definitely a Monday. Of course, all of us in Southern California are just so happy to have the sun back in the sky again. Um, Makes things a little bit easier. Not trapped in our houses all day, feeling like we're living in Seattle. Okay, so speaking of a Monday, yeah, I was kind of getting those comments from a lot of the people that I communicate with on a daily basis in the trading arena. Um, well, before I get into too much detail on that, let's go ahead and make the lawyers happy real quick here. And once again, welcome everybody to another edition of the office hours. So, before we get going here, just want to make sure everybody is aware that we are publishers of high quality information and we're educators here. So everything that we share with you here today is strictly for educational purposes. Please do not misconstrue this as a solicitation to buy or sell anything. If you need that type of service, there are literally hundreds, if not thousands, of people out there with a licensed with the license ability to give you financial advice. So if you need those people, please seek them out. Now, before we get into the meat of the presentation here, seems that Jamie can't operate his fingers today. Bear with me. Just want to make everybody aware, especially the people that might be attending for the first time. Not only do we have state-of-the-art, leading-edge technology to help you find whatever it might be that you're looking for in the marketplaces, we've also built a community around that technology. Of course, you're here today, and every Monday it's myself and Steve manning the helm here in the webinar. But on Tuesdays, we progress to the Steve Show with Trade of the Week. Andy Lindloff rides shotgun with him on Tuesdays, followed up by Brad and Dan Q&A demo on Wednesday. And then, of course, we round it out with Andy's Trading Studio, and I ride shotgun with him. And because we're nice people, we give you Fridays off to go do what you like to do. In addition to that, we've got a free trading room hosted by Barry Anderson that is free to everyone, not just Trade Idea subscribers. It's a great place to go and learn about the technology, and also it's a very vibrant trading community. 500-600 people a day in that thing. So if you have not been taking advantage, don't do yourself a disservice. Get in
If
there.
I could add something there, that is going to be the place to be during the February 6th open house week. When we have our open houses, it's kind of all hands on deck in there, and we've got a technical support tab for people as well who are just starting off, and how do I do this, how do I do that? But that's going to be the place you're going to want to be during the week of our open house. So I just wanted to make sure that that was put out there because a lot of people, might have some questions, and that's the best place to be during that time, the live trading room.
Right, and I see Sylvia asking how to get to the trading room. It's real easy. You just go to our homepage, look up to the upper right, and you'll be able to click on Live Trading Room. Boom, it takes you right there. Pretty easy to generate a password, and then you log in and get right in there. Pretty effortless. Okay. All right, so here we have the the itinerary mapped out, and we're going to do the same old song and dance. We're going to let Steve take us through a market recap, what the markets are doing, anything out of the ordinary. Of course, we're going to do a Holly recap as well. But of course, those of you who follow Holly realize that she was pretty inactive today. There was a lot of stat noise out there, statistical noise. And we're going to get on into, on a day like today where we're all in the chair, couldn't be, called the easiest trading day out there. But a lot of the times, things are not as they appear, so we're going to get into a very good example of that first little bullet point under what can we do on days like today. Got some good stuff for you guys. So, having said that, Steve, if you are ready, I shall pass the baton and let you do your thing here.
Oh, sure, why not?
There you go.
Let me show the screen. Okay, the green screen. Let's take that off. We'll come back to that. Looking at our four major ETFs, once again, these are the same lines we've been looking at going back many, many weeks here, levels of support and resistance, and trying to use these simple lines to kind of gauge where we are in addition to gauging where the leadership is. Well, the broadest of all is the S&P 500. So if we look at the SPY, we notice something a little concerning here. I mean, here was our breakout level above that last final orange line. And as we always want to see, there was a nice gap and a trade. This was last Wednesday, closing on highs, and then we just kind of hit a wall. This is about the same time that the Dow hit 2,000. But what's interesting technically, and we're only concerned with technically speaking, is that we had 3 days of closure above that line. We want to see many, many days of closing above those lines to keep the game going, keep the trend moving, the higher lows, the higher highs. But what happened today across the board in many different indexes was the overnight gap down and then some selling, real hard selling early in the morning, only to have our 330 friend show up. I don't know who our 330 friend is, but he's been around a lot for the last few years in this crazy market where kind of a stick save at the end of the day, buyers can tend to come back in, and what that does is it kind of creates those wicks that we see here on the downside using the daily candle again here. But, you know, that's the plus side, is the 330 buyers stepped in. Okay, great. But the problem is we have now closed below this line. So that's kind of a red flag that's up. You know, we need to keep the price above this breakout line. We could have easily had some chop and some sell down and buy back, but if we'd have closed above that line, that would have been a lot more bullish for the SPYs. Now the diamonds, as I said, even worse. You know, they closed they got to 2,000, 20,000 last week, and same thing, bounced, came back below this line and closed below their breakout line. Well, the leadership, if you recall, recently has been in the Qs. And the Qs have pretty much been doing their own thing and not really looking like a lot of the others. I'll go ahead and put that line in right there. It's a first level of interest that I think that probably should have been drawn a while ago. But Q's technology-laden ETF's been really strong. And then today, once again, the buyers stepped in at 330 on the Qs as well. Now, the IWM actually started the year off, started the post-election move with leadership. The IWM, the small cap, the Russell 2000, has done very, very little. Can't get out of its own way here. Matter of fact, it challenged its current support line, which was resistance here, so that becomes current support. A lot of mess down here. We closed below and we popped back above on that big day, but we did it again. We traded below and closed above. So the IWM is trying its best to hang on to whatever it can here at this 134.20 level, which again was prior resistance, is now current support. So, I mean, that's what's going on in the market. You know, a couple caution flags. We don't like to see the amount of selling we saw this morning on a lot of volume. If we go back to the SPY, there's giant volume. A couple of people on Twitter that follow this stuff were saying, wow, we have not seen this kind of downside volume in a long time. But then once the market got a hold of itself and we get to the end of the day, it's just kind of same old, buyers stepping back in. So, you know, the bears would have loved to have seen us gap down and close on lows and have some momentum to continue, but the 330 buyer kind of prevented that today. I'm going to, before I hand it back over to Jamie, I was going to talk a little bit about Twitter and what happened, a couple things today. You know, here's dry ships, and I put a tweet out this morning. You know, I just want to remind a lot of players out there that you're never going to probably see anything like this in the near-term future again. It's dry ships. And unfortunately, what it does is a lot of newer players think that they can get back in and feel this magic again. Well, guys, this magic is gone. It's not coming back. Dry ships has been an absolute abysmal trade as we can start to get a perspective here of red candle after red candle. And the reason I wanted to bring it up is because one of the worst things a new trader can do, the one thing that blows out new traders very quickly, is not having an open mind and getting married to a position and not getting out. I did it. I know Jamie's probably done it. I can't remember the name of the stock, but it was in my first year of trading. It was a big lesson learned. I would hold on to a stock that was doing this for 5 or 6 days, and finally I just had to admit, what the heck am I doing? This is costing me opportunity cost to look for other trades. I'm sitting here worried and nursing this thing. There's absolutely no reason that says I should be taking any attempt technically on a stock like this. So it was kind of funny. I just thought I was doing my civic duty today. I thought I'd go out to Twitter and just remind people, hey, be careful. The worst thing you can do is fall in love with an albatross and not get out of it, and take a giant loss. Taking a giant loss is how you lose in this game, and a lot of people can't recover from that. So, just trying to help some people early on doing that. And what was funny is I got a quick response back from somebody that said, "Why don't you shut up and mind your own business?" And I laughed and thought, okay, here's somebody who's probably fitting that bill. They probably got dry ships on Twitter, and they're just looking at the dry ships stream. And anytime that something comes through that talks negative about their beloved dry ships, they attack you. So they attacked me, and then they blocked me. They didn't even allow me a chance to respond. But that's a tough position to have in this market, having a closed mind and not being open to what other people, a lot of people on Twitter saying the same thing I'm saying is wrong with dry ships. I see so many dry ships up after market. That's great. But, for this 4-week period here, it was an absolute nightmare for traders who didn't really know what they were doing, riding stocks from $40 down to $2. So I want to move on quickly and double shift on Twitter as well. Let me go back to, where is that? Here it is. Okay, so if some of you guys follow me on Twitter, that's great. If you don't, I'm under @TodayTrader, and what I like to do a lot of times in real time is not throw up 20 or 30 charts over the weekend, and then when a couple of them pop, I can say, hey, look at that. I showed you guys that. Well, I prefer a little bit more value added in my Twitter stream. So I'm going to back up a little bit here. GoPro. Well, for those of you who have been following the trend change lubricant short squeeze setup, and those of you that haven't, it's going to be new to you, but take a look at what we got here. That's about as trend change lubricant short squeeze setup as we could get. And we got it today. We got it in real time. And it's a shame that person that was upset at my dry ships call blocked me, because I only focused on one stock in real time today. So if you're not following me, this is the kind of stuff I try to add value with. Oh, here was my dry ships tweet, by the way. So many people on Twitter warning about picking bottoms in dry ships over the last 2 weeks. Don't take stubborn big losses. And that offended somebody. But anyway, I came back and I noticed GoPro, which is the trade of the week last week, and we'll save a lot of that content for tomorrow night, was starting to make its move. And so I'm saying in real time, hey, if GoPro finds its way above 1044, we could see a short squeeze. And here's my reasoning, 33%. So here's kind of a shot before the actual event. It's not after the fact, it's before the fact. And then GoPro is trying here. And then I chime in and say the 5-minute volume on GoPro, which I basically derive from this sucker right here. Oh, look, GoPro went out at 1,400 times its normal 5-minute volume, but at the time, it was making new highs above critical levels, and I'm walking you guys through this in real time on my Twitter feed. All right, at the time, it was 600%, and that's the kind of stuff we want to see. And when we see stocks breaking down or breaking through and up big levels of support, resistance, or pivot levels, we don't want to see anemic volume. We want to see real-time volume. And so basically, I was walking everybody through that trade today on Twitter, and it continued into the close, and it was a great trade. And I'm very happy about that. And so I hope that if some of you start to follow me on Twitter, that you realize that's what my game plan is to try and walk you through these things before they trigger and give you the reason why. Now, it just so happens that GoPro was on the radar because it was the trade of the week last week. And let's go back to that real quick. Trade of the week last week, we can see it basically had gapped up and then just went sideways. So there was really no concern to get out of a trade like this. It was just waiting for its moment. And today it had its moment. If you're not on the trade of the week list, I sent out another tweet. Basically let everybody know since the beginning of 2007, SBGL is currently up 16%. The FCX call is up 6%. The GoPro call after today was up 10%. And there's one more in there, True, which hasn't really done anything, so I left that. It's basically flat. But True, there's the daily chart on True. And what do you know? True has 31% short the float. As well. So this could be another type of short squeeze to come at some point, but right now those are the trades of the week that are active. And if you're not following me on Twitter, I'd love to help you guys out in real time that are looking for some, real-time ideas, and in addition to some other goofy off-topic stuff like, cats writing in the dashboard there. So that's my little sermon on Twitter and how I like to use it, and hope some of you guys follow me. I try to add real-time value, and GoPro was a great example today of how I was just kind of trying to walk people through as it was happening. So I'll turn it back over to Jamie, but without, just the reminder that we had kind of a red flag today in both the Dow and the SPY. Both of those guys closed below their breakout level, and we don't really want to see that. Gosh darn it. We want to see continued price action moving above these levels. So we're on notice a little bit, but the 3 o'clock buyers popped in and certainly helped. So that's where we are. It was kind of a conundrum of a day, and I'll let Jamie kind of take it from there. So let me pass it back to you, Jamie.
Thank you, sir. And good stuff, Steve. Good stuff. And exactly what you said about people holding on, hoping that the stock bounces back up. The dry ships example. And as soon as you started telling that story, I immediately thought back to all the people I've seen do this. Of course, we've done it. I was never the guy that would hold things like that, but I was the guy that if I had a bad day, it was from 1,000 paper cuts from over trading, right? But whatever your weakness is, if you're not on top of it all the time, keeping it at bay, that's part of what gets us as traders is that mental discipline. Just takes a little lapse, a little over trading, a little stubbornness, and it can really parlay into a big problem that you don't want. So just keep nipping it in the bud and keeping to our rule sets and having a game plan is going to help us alleviate that a lot of the times. Now, one more thing about that, about Steve and myself, Dan Merkin, Andy, between us four, we've got close to 100 years of market experience. Now, does that mean we're the smartest guys on the block and that we're right all the time? No. It just means that we've seen and done a lot, and so the things that we have experienced in the past tend to repeat themselves, and a lot of this comes down to basic common sense type stuff. But we humans don't like to make things easy or simple, so that's kind of what it's all about here is let's simplify things, okay? Today was a perfect example of things not really appearing as they were, and I'll get into that in a little bit more detail here in just a second. But on a day like today where alpha was hiding and the statistical noise that we can see, especially in the Holly activity today, was very high. We could say statistical noise was high or statistical probability was very rare today. In both cases, it's an absence of that alpha that we seek. So let's go ahead and talk about Holly and what she did today and what we can take away from it. And of course, we have to do this in real time. Looking back in retrospect is always a whole lot easier. But by just getting used to a simple little methodology, we can certainly expedite that learning curve. So Holly today showed up with 10 strategies that made the cut for the trading session today. We got 3 shorts and the rest were longs, so 3 shorts, 7 longs for a total of 10. Of course, out of 10 strategies, we only had 2 that fired today. 4 of them were from this short strategy, and 1 was a long from Wake Up Call. So a very light day for Holly. In the past, very rare to see her with a trade count this small. Of course, since we popped the 20,000 and kind of started snuggling around at that little range, just been kind of doing the sideways dance. Got a little action outside of that range today. And as Steve said earlier, the interesting thing that I noticed and a lot of other people noticed in the Twitter sphere that we keep in touch with, this down move that we saw this morning was on substantial volume. It wasn't earthquake style volume, but it was considerably a bit above normal, and we can see the relative volume numbers kind of all stayed in this area all day, so maybe 50% more on the Qs, not quite 40 on the diamonds, and 20% on the SPY, but we could say it was on decent volume with this down move here. So Holly only having 4 trades today on a day where, not only myself, Steve, but a lot of other individuals that we respect, for their market opinions and whatnot, we're all saying the same thing. It's the, the ear to the ground. What are you hearing today? And all day it was just about choppiness. If you didn't get that short trade on right off the bat, and you're coming down here, you're kind of second guessing yourself. But Holly, being the statistical model that she is, we had only 5 trades generate today. And of course, 4 of those were shorts from the 8. 1 was CASC today. So there's really not anything that extraordinary to point out. The CTSH short is a classic example of Holly taking a loss on her stop hit here on the risk off, but we could see later in the day that would have turned profitable. 35-cent loser versus 34-cent winner. So let's pull the chart up, take a look real quick here. So here we're looking at CTSH on the 5-minute intraday. Draw a line straight across from the blue box, which is Holly's price. And of course, this is a short play, so the stop loss is up here for us. Draw another line like so. Okay, so Holly gets short here. Shortly after, let's see here. Yeah, short right here. We hover around it for a little bit. She gets profitable, and then takes this little spike up. So on this entry right here, if you didn't take the cookies down here, we got popped back up above. Stop gets hit. Now, as we talk about frequently with these Holly plays, sometimes they'll hover around this entry level. They'll pass through it 1, 2, 3, multiple times. We can see here 1, 2, 3. Came back up again, passed through it, we could call this 4 and 5 different times. And of course, later in the day, it finally released, and we did get some follow-through. So on a day like today, there was opportunity if you are using your price alerts. And so, once we get this gyration through here, back down through here again, once we pop up through here, it's always a good idea. Well, I'm not going to sit here and waste all my time hawking this stock. But if it does get back down to this level, I want to know about it. So it'd be real easy just to right-click, set a price alert for that CTSH. So a little bit of trade around opportunity in CTSH today. That's really the only one that's kind of worth speaking about today. Now, the one long that Holly did spit out today pretty much worked immediately. Not a huge move, but it's the move that counts. So we'll just draw that line like so. So Holly says, I'm going to get me a piece of this long right here. Pops and goes north immediately. And depending on your risk tolerances and, how you've decided that you want to interact with Holly, could have played this a couple different ways. Of course, the stop loss is way down here. So it's always good when we see that area not even, get approached whatsoever. Nice little wick down here. But when we look at the reason why Holly exited the trade over here, focusing on the exit reason column here, we can see it was a time stop. So we know that wake-up call is focusing around a 45-minute hold time. So Holly held the whole duration and booked her 16 cents. Now, if we just kind of eyeball this, 9:20, so it would have been about 10:05. She would have been punching out about right here. So a lot of people ask the question a lot, well, do I follow Holly on risk off or do I go risk on? Should I pick one and stick with it? And really, in my opinion, it's more about each and every trade, because going risk on is simply we're acknowledging that Holly is getting out for one reason, whether that's a profit save or the timed hold is expired. But deciding to stay in the trade and attempting to get more than Holly is going risk on. So it's always you can't go wrong getting out of half of your position when you see Holly exiting. And if you feel like the chart is telling you to do so, maybe some other metrics are telling you to stay in this trade, well, get out of half with Holly, stay in that other half, try to get a little bit more, but exercise some, practical stop loss methodology. A lot of people say, okay, I'm getting out of half with Holly here. I'm going to give the other half back to a break even or up to 50% of what I'm currently up. But the main goal is there is to be able to take something out of the trade, whether you go risk on, risk off, or a hybrid of the two. So in this case, well, on a percentage basis, another 8 cents on top of 16, or 7 cents there, is what the potential could have been. Usually we've got a few more examples of whether a trade around or going risk on, but just due to the conditions today, Holly only spits out 5 trades, a little opportunity in these two for the trade arounds or the risk on. That's pretty much about it for Holly today. And on a day like today, this is the way that we would like to see her behave. So risk on total, 42 cents today. Now before we move on, for those of you who attend regulars, you know that Holly had quite a statistical year against the S&P 500 last year. So you might be wondering, okay, how has she fared since the beginning of the year today? And this is kind of looking like a replay of last year. So this is Holly since the beginning of January and how she's done against the S&P. Now, I think we were talking about this before. The SPY has not adjusted when we took this snapshot earlier, so we'll have a little dip down. But that's really the only way this chart's going to change. So bottom line is the statistical model. It continues to perform and should continue to perform. While we're on the Holly topic, we do have some new functionality coming down the pipeline, hopefully sooner than later, which will take all of the things that we talk about in these webinars, and basically what we're going to be able to add is another layer of the software which will reinforce and bring up these points that we're talking about now. When Holly's getting out, is it risk on, is it risk off, so forth and so on. So continuing to make improvements in the AI, and hopefully soon we'll have an updated version which will have that new functionality. Okay, so on a day like today, Holly was telling us something, because when a statistical model, a highly advanced statistical model, is struggling, and we can see Holly's struggle just by looking at the chart here. If we're going risk off, slight red in the beginning, which typically is kind of normal. Even if Holly's going to have a good up day, we get a little drawdown, and then she makes her way back to profitability, and boom, 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 takes off and goes to the races. That's kind of what it looked like was unfolding this morning. Little drawdown of about 25 cents. Then we get green, not even to the tune of 21 cents. We fold over, and then we're just underwater the rest of the day. Risk on looks a little bit different. We see the same type of activity. We go underwater, but holding all day. We were rewarded. Of course, that's taking more risk. But when you see this type of activity early in the day, that's Holly giving you a completely different set of information. It's telling you, hey, I'm this advanced statistical model, and I'm really having a hard time finding any alpha. The statistical noise is very high. So we need to listen to that. It's the old canary in the coal mine. Holly was kind of choking out there for the first part of the day, so that's telling us something. What's it telling us? Well, in my opinion, it's telling us this right down here. Be very, very selective. Maybe even some hand sitting. Some of the most famous traders out there, say they've made the most money sitting on their hands, when it wasn't conducive to maneuver or do anything, right? So very, very selective. A little hand sitting never hurt anybody. And listen to what the market, and specifically Holly, is telling us. So what I've prepared for you guys next is very eye-opening. And I've talked about this a lot and said that sometimes these days will appear. And today's a very good example, because everybody knows what the market did, whether we're looking at the SPY, straight down, a bounce, and then a grind up. And as Steve said, the 330 buyer shows up, which is a good indicator for future reference. If we didn't see the 330 buyer show up, that'd just be one more thing that could maybe tell us that there might be more selling, but not to get down that path. But whichever index we're looking at, pretty much the same type of opening action. Didn't put in this bounce till a little bit, maybe a little hour, about an hour and 20 minutes into the open is when this started forming here. So when I'm talking about being very, very selective, I'm talking about highly liquid streams. For those of you who might remember Andy and I talking about the turbo brakes custom versions of these tickers that only include stocks where the market cap is 5.4 billion minimum, which is the minimum for S&P inclusion. And what I did today is, obviously the downside was very, very active. I mean, we can start looking at these symbols, but guess what? They're all pretty much going to mimic what we saw up here, but they did have nice follow-through. And that's no big surprise because those were the large cap stocks that were actually being sold heavily today. What's attributable to a lot of the action that we saw in the SPY here with this slightly above average volume. Now, the interesting observation comes from the upside version today. So once again, just to give everybody a peek in here, it's not a complex formula, it's simple. Its beauty is in the simplicity. So we're saying minimum market cap, 5.4 billion. You see, that gives us a little bit more freedom. We don't have to include minimum daily volumes and things of that nature. Okay? If it's 5.4 billion market cap, the odds are it's probably a pretty liquid stock. Can't say it's 100% accurate, but in the high 90s. So we focus on our core metrics. So what I did is I copied the history and I took probably not all of the symbols that were coming through here, but maybe up until about 30 minutes before the close. And I created a custom list out of those symbols. And I want to say about 130 showed up, but let's go back and confirm real quick here. So on my 5.4 up today, we can see 138 symbols coming through this list today. And what I did next is I took my volume radar screen and I modified it by simply removing all filters, since we're going to be looking at a custom list. And now we can see this top list is only looking at the 5.4 up list today. So keep in mind, what, 130 something stocks on there? And on a day where there was just this sea of red, and though we did recoup a little bit, we didn't come anywhere close to even closing at the top of this range, much less attempting to cover any of that gap. Now, I've got this list sorted by where these stocks pretty much closed today, position and range. Now, these stocks were punching through highs at the close. These guys were at highs. These guys were very close to their highs. But look at all of these guys. The only guys that finished slightly red in this whole basket of 139 stocks are down here, and there's just a handful of them. So on a day where there was perceived and substantial selling on the broader markets, this little ticker right here, if you were watching it, provided you with play after play after play that finished in the upper, if we're looking at these guys, that finished in the upper extremes. So I find that pretty amazing on a day like today, where there was just downside, downside, downside. If you weren't quick to the party on the short side, you were hesitant. And then, if you're trying to pick bottoms, we know how that game goes. So, very slippery slope for today. But that's the beauty in what we do here, ladies and gentlemen, is we give you the ability to look under the rug. Most people out there, they're just focusing on one layer of the market. They don't even know that all these other layers exist and how they can take those layers and manipulate them in very simple formats like what you're seeing here. Then all of a sudden, of course we're looking in retrospect here, but if you were watching the turbo breaks up 5.4 billion version, all of these guys were spun out to you in real time as the market progressed. And when I first built these windows, I'm like, there's going to be some quality plays coming through here because, regardless of the pattern that you're looking for, because the volume's going to be there and the chances of that pattern unfolding are a lot higher if the volume is there. But this is yet another cool observation, is that by watching this high quality data stream that's composed of highly liquid stocks, we were given 139 different symbols today that gravitated north pretty much all day. So I hope that resonates with everybody. I know some people might have some questions out there. I don't have my questions panel up right now, but I can pull it up if anybody has any specific questions about the methodology that you're seeing here. But a very good example, very good contrarian example of how things are often not as they appear. What do you think, Steve?
I think you're right, but I've been knocking out a lot of questions. You have been getting a lot of questions, and I've been trying my best to answer them about things. There's a couple people talking about pivot levels. How do you know on that trend change lubricant where the pivot level would be? Well, why don't we pull up GoPro just as an example, and we can look at maybe a couple of instances on the daily chart. And what I'm trying to convey is what you got to do is recognize first we want to find stocks that have 25, 30, 35% short the float. Okay, in this case, GoPro had 25, 30% short the float. Now, where we want to draw that line down there, I'm going to have you put that orange line on those two tower wicks before the gap up. You see those two wicks way in the past before the gap up? Basically, this stock did not trade above its level. It gapped above its level, which made it difficult. But for all intents and purposes here, we're trying to demonstrate how do you find pivot levels, Steve? Okay. Go ahead and erase that. We'll keep that in there because that's a secondary pivot level. Exactly. Let's take a look at this first one here. I think James was one that was asking about. And zoom back out. Go ahead and zoom back out because I had mentioned look left. All right. We can see what we got here, but if we zoom out just a little bit, we see that bottom line. We see that bottom line actually did show up as a prior support. You see that back there above the between June and July, right there, exactly. Okay, look left. There's support. Interesting. Okay, stock did some stuff, moved higher, and then it fell apart again. Well, it fell, and zoom in a little bit, and you'll see that secondary line started to fall in place again as support. Okay, perfect. That's a much better view. Just leave it right there. So prior support back in June, support shows up again there in between November and December, and then we break down. And we break down hard. And then we have two wicks that pop up and down and up and down. So there's your pivot point, guys. It's basically a level that was prior support that is now current resistance, and you can even make an argument for that third wick underneath that orange line, that's why we drew that initial orange line down there at the bottom. That's the pivot point that the short sellers didn't want to lose. So here's what happened. You had some sort of a metric come out, channel checks or whatever, some analyst house came out and gave them a nice upgrade after probably getting everybody long in options, including their family and their friends. But they carried a little bit of weight. And that short selling catalyst, 33%, had a lot to do with that gap up. Okay, because that was kind of priced in. And then the price action went sideways. Okay, what are we going to do? Who's going to win this battle? The short sellers just lost that lower pivot level. If they break above those higher levels that Jamie drew, 1, 2, 3, or 4 times it touches those levels in the last 2 months, we're going to have some more pain in the shorts. So you've got to put yourself in their position. What's that level I don't want to lose as a short seller? Because those short sellers are not making money if they're going to break back through these pivot levels. So, I typed back as best I could. It takes, a couple thousand hours, to really get a feel for looking at charts. But one of the most basic things you could do is just start to look to how to identify pivot levels. And you can go on Google pivot level on stock charts. But ideally, you're just looking back. You're looking left in the history of a daily chart. And you are looking for levels that were support or resistance, or in a perfect world, where it was once support becomes current resistance, just like happened here on that bottom line. So those are the levels that we as a trader have to continue to have our trader's hat on, but we know we've got a short list from that trend change lubricant that shows us the stocks that are basing and turning and making new 20-day highs, but also have really, really high short floats. So the second step is for us to come in and identify. Now, show them how you might right-click and make sure we would never miss one of these alerts. If you don't have the Trade Ideas Premium functionality, you're missing out on our built-in trade alerts, which can make it really easy to just come in, pop in a price alert, put in your notes that say, hey, above this price, we got 33% short. I think this could be a great short squeeze candidate. And then you set it and you forget it. Okay, it might take 3 or 4 days, and the trade comes to you. You're not chasing your tail looking for a trade on social media or a scan. You've set these things up ahead of time, and they're coming to you. So that's probably the best example I can give you, really, of a current a level for pivots. Let me just take a quick look at some of these other questions here. What does float mean, and how does your system?
Before we get off that topic, I just want to show everybody I've got an alert window here. Now, if I come in here and make sure that I add a description column, when you're using highs and lows as the alerts, it might not be exact, but especially if you're a new person, a new trader trying to kind of just get a feel for everything, if you include that description column using new high and new low alerts, it spits out support and resistance that could be in play. So a lot of the people, don't have description columns or quality columns, and it can really give you a lot of cool information that you didn't know was there, but it's hiding right under the surface. Just FYI.
Sure. What does float mean, and how does the system show that? Okay, well, the float is another term for how many shares are in circulation. The total shares might be locked up with the insiders or institutions, but there is a measurable amount of shares that's called the tradable float, or the float in circulation. And so to take it a step further, if you find a stock that has 25 or 35% short the float, that's not going to mean as much on a stock that has 500 million shares or 600 million shares. It is still significant. That's still a big contingency. But where these can really start to move and move quickly are where you find high short float percents on a stock that has a low float. And in my opinion, any stock under 20 million shares in circulation that's open for trading is a low float. So if you've got 20 million shares and 1/3 of them are short, there's only so many shares that can be traded around, and things can start to move quickly. So that's the perfect catalyst, is a low float stock, meaning under 20 million shares with a high contingency of that float being short. Can you share the Squeeze Me scan? Yes, I can share the Squeeze Me scan. Somebody's also asking about Holly. Why didn't Holly pick up on this stock that was up 10% today? Well, it wasn't a strategy that was set coming into today. There are only a certain amount of strategies that are back tested and set and triggered. Sure, there's a lot of stocks that had great days, and Holly didn't catch them. But Holly is going to focus on statistically probable trades, and that's all done through the evening back testing, over 1 million tests a night, to give us our starting lineup today. So whatever strategy that would have come through, it just wasn't necessarily set up today for the starting lineup. Squeeze Me, yeah, I will drop Squeeze Me in that question box, because I think you guys are able to work off of the question box and retrieve the cloud link, so I'll go ahead and do that. Happy to.
And there's a person asking for those liquid turbo brakes up and down. I can also drop those into the chat field as well.
Yeah, let me find Squeeze Me. Now, real quickly, what I did with Squeeze Me, guys, is I took every stock that's pretty much out there with 25% short float or higher. You know what? It's much more great if we can visualize it. So let me take the screen real quickly and show you what I'm going to do here before I pass this one out. So in the interest of, since we're talking about short float, here's Squeeze Me. I'm going to turn off a filter. The filter called position in 1 year range, which is another way of looking at the 52-week range, and there it is, 95%. If I turn that off, we basically have this giant list of all these stocks, anywhere from, if I do short float, there it is. Let me bring this up and scroll it over. couple of anomalies here, 258%, 180, 180, those are all anomalies. I don't know why the hell those even show up. But if we scroll down to the bottom, you can see here's our minimum cutoff here, 25%. And that's the minimum configuration I gave to try and find which stocks have a high short float. Not a whole lot of filters going on here, $5 to $200. Minimum float has to be 1 million shares or higher, and minimum daily average volume has to be 300,000 shares. So very basic setup on my scan, but watch what happens. You know, I can try and chase and look at every single one of these charts, but look, out of random, I double-click this guy here, AOBC. Well, the shorts are winning this one, all right? I'm not really interested in that. So how can I find the ones where the shorts are in big trouble? Well, what we can do, and this is how I'm going to configure it and pass it to you guys, is we're going to go back in and use our 52-week range finder, and basically, you sent that to Skype, Jamie. Did you mean to send that to Skype?
Yeah, for some reason, Steve, my chat window has disappeared. I can't find it.
So I'll take care of it for you, yeah.
So kind, yes, is to drop those.
Okay, so where did it go? Position in your range. There it is. So what I want to see is I want to see a 95 percentile. I want to see stocks that are just 5 percentile away from making a new 52-week high. And once we plug that in and fire it, now we got a short list. We got a short list of stocks that are close to going to 52. Oh, look at this guy, close to a 52-week high, but still 27% short on 28 million shares. That's interesting. That might be something to mark up, say right about here, and look for a possible short squeeze. So that's how I like to use it. I want to find the ones that are really, really in pain, and nothing is more painful for a short seller than a stock getting ready to go to 52-week highs and they're still naked short without covering. So let me do the same thing. I'll right-click. I'm going to drop this one into the chat window, guys. The chat window is on your toolbar, your GoToMeeting toolbar under chat. Just click the plus button. That window will open up. I'll type in squeeze me here first so you know that this is the first one coming through. And then let me grab Jamie's code for the other one, the turbo brakes. Where is it? We got two of them, right, Jamie, basically?
Right, yeah, we got the upside and the downside.
Okay. So let me click this one.
And once again, ladies and gentlemen, these are very liquid stocks because the minimum market cap, $5.4 billion.
There's one turbo brake. And let me get my Skype up and grab the other turbo brake. Now, if any of you missed these, info at trade-ideas, we can try and get you a copy, especially for those of you that are probably watching on YouTube right now and really wish you had a copy of these. So info at trade-ideas, and it can be routed to myself or to Jamie, and we can email you back the cloud links. All right. We're still on my screen, aren't we? Somebody's asking a question real quick of cadmium. Okay, well, it doesn't look like a bad chart. What's the short float? 18% of 36 million. Yeah, that doesn't look bad. The reason it's not showing up in any of my scans is it's not close to a 52-week high, and it's not so much on the trend change lubricant. It's kind of right in the middle. So, I mean, it's up to you guys to decide exactly, you know, what is interesting. Now, I will tell you, this is a very interesting play, and I am going to, in real time, create a price alert. 18%, and I kind of like the way that's looking. Short float. So when this thing goes off and triggers, it's going to remind me that this is a nice little cup and handle here on the daily chart, and it looks like if we can get above that trigger point, again, here's an inflection point, guys. Sellers popped in here just about 1, 2, 3, 4, 5 times, and we're close to moving through it today. So this thing could trigger very early tomorrow. Not a bad pick there, whoever that was. Sam, good job. Does odds maker backtesting work with pre and post market data? No, it does not. And correct me if I'm wrong, Jamie, but I do not believe it does.
That is correct.
Okay. How do I figure 95% of all-time highs? There is a filter called position in all-time highs range. If I go here real quick, configure, we'll go type in the word position. If I could type position in lifetime range. That's the one you're looking for there. We just did position and year range, but we can do the same thing with position and lifetime, which would really even take it to the next level to freak out the shorts. So a couple of little tricks of the trade and how we try to identify short squeeze potentials. We talked a little bit about some pivot points there, and I think we did a good job of 1 hour's worth of content. So I'm going to pass it back to you, Jamie, and then you can bring in Scott, and we can talk about how cool this upcoming open house is going to be and how also to get a discount code if you're itching to try it even sooner. So back to you, Jamie.
That sounds good. Scott, let me know when you have eyes on my screen here.
Waiting for your screen. Now I can see it.
It's trying.
Loading. There we go.
For
Excellent.
some reason, it's not formatting. I apologize. My computer seems to be having a little issue here right now, but
Well, that's all right. I can see the open house slide. Yeah. Something everyone should be aware of is next week we're having an open house. So whether you're a standard Trade Ideas subscriber and are wondering what premium is actually like to use, or if you're new to Trade Ideas, joining the open house has a very low cost to entry and lets you try the full suite of trade ideas. Go to trade-ideas.com/open house, and for under $9, you get 5 full days to try Trade Ideas Premium. That includes full access to Holly, unlimited backtesting using the odds maker, all kinds of great stuff, the price alerts, and naturally, we're going to be running some additional we're going to be paying additional attention to everyone in the trading room because there will be a lot of people trying out the premium version. Trading room is going to be super active. We're going to have webinars during the course of that week and encouraging everyone to attend and ask questions, just like today. It's going to be super exciting. You can go to your handouts panel on your GoToWebinar interface. There's a little plus next to where it says handouts. Just click on that. You can download a PDF with this link and also the additional information we're going to have on the next couple of slides. So we hope to see everyone who is not currently a premium member at our open house. If you are a premium member, tell your friends. The more people that use Trade Ideas, the better. It's better for you also. In addition to us, we have more data points to create better strategies from. In addition to the open house today, you can save money by going to trade-ideas.com/price and using the code Holly to trade. It's all caps like it is on the screen and on the handout. That's case sensitive. That takes 15% off your first month or your first year of premium. And it still lets you save 10% off your first month or year of standard. Now, if you're consider the bargain of getting into Trade Ideas Standard for 1 month with the 10% off, because that also includes a full hour of one-on-one training with Steve or Jamie or Andy. You can just sign up for that, get that, and that's the best trial you could possibly have. Although we're doing the open house next week, and then upgrade to premium. Premium just like standard also includes that full hour of training, but then bumps you up into the realm of artificial intelligence, unlimited backtesting, shareable price alerts, and our other advanced windows. Outstanding product. Consider how many Bloomberg users there are paying over $3,500 a month for a Bloomberg terminal that doesn't get them any of this information. And you can get it for just $99 a month or $188 a month, depending on the tier of product you're on. When you have a question for us, shoot us an email at info@trade-ideas.com. That's the best place to send your questions that get routed to the appropriate team member. If you've got something for Steve or Jamie direct, you can reach them directly. Their emails are right there on your screen, Steve at or jhodge at. The phone number is mostly for billing or subscription questions during normal business hours. Again, if you have a technical question or a trading question or a setup question or how to use the software question, info@trade-ideas.com. Or there's a chat that's operational during business hours on our pages too. Facebook.com/TradeIdeasPro. If you're on Facebook, look us up there and like our page. We post some additional content there sometimes we don't release elsewhere, so it's fun to have that pop up on your feed. You can share those things with your friends too. You can follow Steve Gomez at Today Trader on Twitter. Jamie Hodges at QuantBot, and Dan Merkin, our CEO, is Trade Ideas 1. We also have Trade Ideas and some other accounts on Twitter too. Follow us on there to find them all. Thanks, everyone. The recording will be in the can and up tonight. You should get an email about it tomorrow morning, and we look forward to seeing you all in our next webinars. Thanks, Steve. Thanks, Jamie. Thanks, Andy.
See you tomorrow night.
Yep.
Thanks, gentlemen.
Thanks.
See you.